Now I will turn to the last part of the presentation, which is about the quest of profitability. So using the outcome of our survey, you can find here two presentation of some result of these banks. The first is the net result by clients. So as you can see from the first panel, this net result have been increasing over time, but they mostly remain negative after a few years of operation. So I recall that some of them have started in the early 2000s. So a couple of them only are profitable, and the rest of the sample of these banks remain in the negative territory. Obviously, there have been some improvement over years, and here you have the result of the survey that we carried out. So you can see that it's not only increasing, but also the variability of result is also decreasing a bit. When we are looking at the breakdown of net banking income per consumer, we can see that in terms of absolute term, the net banking income have increased, but when you represent it per capita, you can see that it has decreased. So it means that the increase of the net banking income has mostly been the result of a reduction of the cost, in particular the operating cost and the IT cost, which are necessary to develop this neobanks. So it means that after a few years, they are able to reduce the cost, but since they are not necessarily able yet to increase the net banking income per customer. We are also looking in the paper of another issue, which is the one which is related to the first point I made, which is the competition between these new banks to acquire new clients. And in this context, most of them are relying on offers which are provided to new clients. And these offers initially represent a significant amount of money, something between 100 and 200 euro when you open an account. And it means that it represents mostly the operating cost or the cost of the credit card per year. So it's like providing these services for free. In this chart, we have tried to assess the extent to which this initial offer are weighting down the net income per customer. And we have tried to measure that by relying on two assumptions which are alleviating this cost. The first is to suppose that the net income are restated considering that only 20% of new customers are sponsored, because these banks are also offering a sponsorship. And the other one is even more positive when we assume that all the new consumer that has been acquired have been made through sponsorship only. And as you can see, there are two kinds of banks. Bank 2 and Bank 4 are banks which are profitable. Bank 4 actually is profitable even with his initial offer to clients. But these two banks still continue to offer initial offers to their new clients for the sake of remaining competitive. And Bank 2 actually is still negative and still operating with negative result, whereas Bank 1, 3, and 5 are still non-profitable after a few years, and therefore they really rely on their parent company to be able to survive.
Laurent, please,
yes.
3 minutes, 3 minutes, please.
Okay. I'll be fast. So looking at now the breakdown of clients, you can see that most of these banks are really focusing on the top range of their distribution of clients. So here you have the distribution by income quintile, and as you can see, the bulk of their result, more than 80%, is done with the richer clients. So it means that it's very important for this bank to keep this client and to make them active. The reason for why we have these different kind of strategies stem from different reasons. The first is for some of the bank, the profitability is not necessarily an issue for the neobank by itself. So you have to consider the strategy of the whole group. And in most cases, these represent defensive strategies where neobanks provide services in order to remain attractive and to keep their clients. The two other kind of strategies that we have seen are startup strategies, which are usually adopted by newcomers and especially by fintech. So the idea is to show that you can develop rapidly and increase your consumer base, even if you're not profitable. And the objective is to be bought by a bigger bank. And another strategy is to try to generate network effects by providing a service that is free or even subsidizing the service by offering premium in order to attract and acquire a vast amount of clients. Perhaps since I need to move, I like to conclude with this slide, which is making a link also with the presentation by Marcus and Olli in a way, which is about the issue of platforming. So in France, there are few platforms and even it's not really well developed. And one question is whether the trend that we are seeing and the development of bank as services is the prefiguration of the apparition of a platform in France. So here what we are seeing is that it's not necessarily the case that a platform will substitute to traditional banks. First, these traditional banks may offer their own platform, and some of them have started to do that. And the other thing that we are seeing is rather than platform will still operate by providing financial and banking services, but they will not get into the business of banking as such because the cost of banking regulation is way too high. So a way to do that is to provide banking services which are provided by banking traditional banks or neobanks that the platform can put into competition in order to provide a service that is really cheap and that can also be very competitive and attractive to customers. So thanks a lot. I can stop here the presentation.
Thank you. Thank you very much, Laurent, for your presentation. And the discussions will be Yannick Timmer from the International Monetary Fund, please. Laurent, maybe you could stop sharing the screen, please.
Yes, sorry.
Thank you.
Good afternoon. Can you see the screen? It should be.
Yes, everything is fine.
Okay. So yeah, thank you very much for the opportunity to discuss this report. So let me give a short summary first. So the report studies the emergence of neobanks in France, and let me briefly define what a neobank is. So a neobank is a type of direct bank that operates exclusively online without traditional physical branch networks. And what the report does, it's mainly based on a survey of around 50 neobanks in France, and then it demonstrates a few facts and discusses a few issues about neobanks and how they will behave in the future. The way I see this is that the main point of the report, and also that the title of the report, is that neobanks have not been able to generate profit, but the losses have decreased actually over time. this doesn't seem to be driven by an increase in the income per customer, but instead by a reduction in their cost. Overall, I think it has been a very extremely insightful report for me to read, and I've learned a lot about the functioning of neobanks. So first, I would like to ask a little bit what exactly the data is that the report looks at. So it's covering, it's a survey of 15 neobanks, but what I haven't really understood yet is what exactly the survey is about. So we know that it's about profitability, but I think it would be good to understand, also write down in the report or in any follow-up work, what exactly other kind of variables are available to do a bit more analysis about these neobanks and potentially also compare them to traditional banks in France. Second, I would like to talk about the profitability aspect. So what we can see is that neobanks have not been able to generate profits yet, but the profits have, the losses have decreased over time. So this could be due to two effects. The one is that it's kind of just a time effect, or the other one is an age effect. So if we, for example, know how old these neobanks are and when they were founded, then we could kind of try to disentangle the two effects. So maybe is it the case that just like now, I think 2018, they are, they're functioning in a more favorable market environment. That's the reason why the profits have decreased, or is it because they have become more mature? They have already made use of the customer network, and then that's why they are able to reduce their losses or potentially increase their profits. One table that you show is that you can see which kind of products the neobanks offer. And so you could, maybe the first thing you could do is just to see which neobanks are actually profitable. Is that somehow linked to the product that they offer? So that should be feasible for sure. Some other suggestions that I have, but of course that also depends on whether they have this data available, is kind of to differentiate a little bit where the revenues are coming from. So, for example, you say that many of the revenues are coming from the very high income customers, but is it driven kind of, you mentioned these explanations, but I don't know if you can maybe shed more light on it with the data that you have available. So is it coming from premium accounts? Is it more like the transaction fees that they make use of, or is it interest income? Are they investing the money in somehow the deposits that they have somehow, and that's the way how they generate income? And then relatedly to that, is it the case that, you know, if it's kind of through the interest income, to what extent are negative interest rates affecting the neobank? So, for example, if a lot of it is deposit, a lot of the funding are customer deposits, and they don't have access to the interbank market, and they're not able to cut rates below zero, that may actually harm them. And maybe that's one reason why they are not yet profitable. Maybe in the positive interest rate environment they would be. So these are, I think, issues that you could potentially shed light on with data, but even if you cannot do that, maybe you can discuss them a little bit. The other suggestion that I would have is to merge the sample of neobanks that you have to traditional banks. And I think that should be possible with even publicly available or privately available data, and then you can kind of compare the neobanks in terms of the balance sheet characteristics to other banks, and also see whether the profitability went into different directions and so on. One issue that you are discussing already is whether they are like a threat or a complement to traditional banks. So I think I've seen that 6.5% of French people are customers of neobanks. So is this going to crowd out the other customers? Is that going to crowd out the other banks, or are they complements? And I think you have already suggested that they may actually be complements, and that's actually interestingly consistent with what we have seen in the paper that was presented yesterday by Paul, who also showed that, you know, there are actually complementarities between fintechs and traditional banks. So then,
Yannick, could you please finish in 2 minutes, please? Thank you.
Okay. Yes. Sure. Should be no problem. One unfair point, of course, is that I think it would be very nice to discuss COVID and what the implications are for neobanks. I guess when you wrote the report, there was no COVID, so you couldn't do that. But that's certainly an interesting avenue for future research. So is it, for example, the case that because people reduced their mobility so much, they didn't want to go to traditional bank branches, that the market share have increased, and maybe that also helped them to generate more income? Maybe one last thing is you're mentioning the 3 different explanations for why neobanks are not yet profitable. So they're subsidizing their owners, they're hoping of being bought, or they want to build a captive client base. So because they don't necessarily have to be profitable yet because they have these network effects later on. And it would be good to distinguish a bit between these explanations. Maybe last, maybe you could discuss what the potential for the financial stability risk of neobanks are and how you think they should be regulated or regulated differently from traditional banks. Overall, it's a great report. I highly recommend reading it for everyone, and hopefully in the future, the data that is used in the survey, or maybe more data is going to be collected, can be used to shed even more light on the functioning of neobanks. Thank you.
Thank you very much, Yannick, for keeping the time. So I would give the floor for Laurent for a very quick reply to some of the questions. There's also one quick question, more like a clarification on the chat box from Filippo from ECB. What do you mean by bank agencies? Are they branches?
Okay, so thanks a lot for the comments, and I will take them on board. The main point is that we have been really limited by data availability. So, and that's related to a point that you are stressing about the potential consequences for financial stability. So in our context, we requested some data, but it's mostly based on a voluntary basis. And as you have seen in the paper and in the presentation, we were able to compute net income and more interesting information only for a subset of these banks. For the others, the information was not complete, sometimes lacking of, yes, even lacking, which was a bit of a surprise for us with respect to this kind of digital players where you expect to have a lot of information. So the trend is that there is an increase over time, and the increase is mostly due to cost reduction, partly because initially there is a need to invest a lot in the technology, in particular the IT system. And over time, and thanks to client acquisition, you can reduce this cost and therefore not yet generate net positive income, but at least reduce negative income. And the last point I would like to raise is that what we have seen is also that in most cases, the bad result are related to too optimistic expectation with respect to client acquisition. So, and this is related also to network effects. So what we have seen by these newcomers is what is traditional in network economics, which is that if you want to gain a lot and to move ahead of the tipping points, you have to decrease or to subsidize the offer. But it means that you expect to gain a wide range of the market. And if you are, too optimistic with respect to that, then you are not generating what you expect from network effect, but you have a price which is mispriced, in fact, and therefore you are generating losses. But thanks a lot, and in effect, we haven't touched upon the COVID crisis, so that will be the next survey. We had the opportunity to discuss with the industry about that. And so the only point I take from this meeting was that as for other banks, in fact, the impact was very heterogeneous across the new banks and across their activities. So really, so here again, you have also a sectoral impact, which is very different across these new banks. Thanks a lot.